Hey everybody, Frank Finance here. Hope you're having a wonderful day. Thank you so much for joining me. Today I want to talk about recessions. Recessions have been in the news for maybe the last 3 or 4 months. Constantly we're saying there's going to be a downtrend over the last seven years. This large bull market, folks have said there's going to be a recession impending. We did see one during COVID. Granted, it was very short-lived. However, things are changing. We have high inflation. We have increasing interest rates. We have some things happening on a global level that have affected oil prices, and we're starting to see what could be a possible recession. We did see negative GDP growth for the one quarter. The definition is if 2 back-to-back quarters, we're officially in a recession. At this point, I don't think it's likely. And again, I'm not a fear monger. I haven't ever made a video about the recession before or a possible recession. But at this point, I think it's almost inevitable and is pretty certain that a recession will occur. The question we really have to ask ourselves is what is going to happen in the short to medium term? In the long term, we know the answer is everything's going to be fine. Just keep investing for the long term. But if for those who are really kind of concerned what's going to happen in the short to medium term, here are kind of my predictions. So first thing, fear moves the market. So that's the first thing you got to kind of keep in your head for a fact that as a recession does come and it becomes more and more likely, we'll continue to see the market continue to go down. Now, as interest rates continue to go up, that increases the risk premium. If inflation continues to go sky high, that doesn't necessarily mean a bad thing for stocks, but if it's in combination with higher interest rates, that is a bad thing for the stock market overall. I'll make another video about that special combination. The next thing I want to talk about is really the 2 different scenarios, I think, in terms of how much price movement we will see in the market if a recession actually occurs, which again, at this point, I think is almost inevitable. Now, again, if we see a second quarter of negative GDP growth and basically everything remains the same, everything with Ukraine stays the same, we have really relatively stable uncertainty if you keep it, if that makes sense. Inflation stays the same, interest rates are predictably increasing. Geopolitically, there's nothing crazy else happening. We see oil prices staying where they're at. If nothing else changes, I think we'll see another price action between 10 and 15%, which I think, again, sounds pretty large, but for the market overall, that is pretty, I think, mellow for a recession. Now, and I basically say that's basically if, nothing else happens. When a medium to major event happens. Now, these are the things that are hard to predict. A major event is basically something that no one else saw coming. A medium event could be a combination of several risk factors that have actually come to fruition. That, again, risk factors, you saw them, but they were low probability or medium probability, and we didn't know if they were going to become true. So if a medium to a major event happens, or a combination of medium events, I do think that, again, that increases volatility and will, in combination with a recession news, I think we'll see a market drop in between 15 and 30% from where we are right now. So I know those things are a little bit, I'm not trying to be all doom and gloom. It's more of just being kind of prepared for what's going to happen. If you see it coming ahead, then you can prepare mentally. I'm not saying sell your assets. I'm not saying sell your stocks. More than likely, the best thing to do in this scenario is to keep investing in the stock market, especially if you're a long-term investors. I will make another video on if you have short-term capital needs, whether you need to invest in a business, you need to invest in real estate, you have other desires, you want to put a down payment for a house, whatever it may be, that this may be a good time to take money out of the market, but only if, and the only thing I would say is if those things are certain to happen within a short time period. Anywhere from 2 to 3 years, especially on the house side. If you're not making a business investment in the next year to 60 months to a year, yeah, you're probably kidding yourself at this point. So point is on this is make sure you have enough cash on hand to get through tough times. Make sure you have that. But the last thing you want to do is to be scared here. That's not something to be scared of. You look at these things, you predict them, you understand what may or may not happen. Again, this may not happen, right? if for whatever happens, again, there is a scenario here where inflation is running so hot that it offsets any negative GDP growth from the lack of spending. So if that happens, we're not going to see a recession, and that basically pushes it off for another 5 months down the road before a possible recession can officially be announced. So all that being said is just be relaxed. Don't make any rush decisions. Make sure you're thoughtful. Make sure you're doing things for the long term, and at the end of the day, things are going to be good for you.